Okay, so November, who would have thought? Where did this year go? And obviously, a lot of different things happening in this year. A lot of different perspectives from people that were saying, it started out to be going to be the best year in real estate. I can basically say from the different boards that I'm a member of and the stats that we got, January, February, and first part of March were better than even the boom of the 2017, 2016. Um, we were seeing that from all different offices in all different communities. And then obviously then COVID hit, and April was sort of stagnant. April was basically things were frozen. People were unsure on how long it was going to be, what it was going to be. And then in May, we started seeing where it was like, okay, people said this isn't just going to go away in a couple of weeks. And then it became, okay, if this is going to be here, how do we deal with it? And then obviously the Ontario Real Estate Association, Canadian Real Estate Association came out with protocols that would allow us to show properties, and we followed those protocols. And that May started moving the activity, okay? And with the activity moving, then we saw momentum build up for June. And all of a sudden, June went from being where people thought, well, how's it going to compare to last June, to where it actually was just as good as June the previous year. You had April that was about 70% off. You had May that was about 50% off. And I'm talking about activity, not in prices, because prices actually did not adjust at all. And then in June, you started seeing where it was activity-wise was very comparable to last year. Well, now if you come all the way forward with all the pent-up demand, with money being so cheap, we started seeing where activity was being as much as 28, 30, 35% more than last year. And if you take a look at what's happened in October, there are areas of October in parts of Ontario that the activity has been 68% higher than it was last October. That's a lot of transactions, and people are going like, how is this happening? Why is this happening? So I'm just going to give you an overview of what I see and what I hear when I'm talking with different people, different brokers in all areas of Ontario, people in the financial industry, people who are economists looking at saying, okay, why is it not, what's going on? And there are some different thoughts, but I'm just going to give you what I've seen. And I've been pretty active on my real estate side the last 90 days on my database. I've got a database that's, been in the business 40 years. So I've got people that are all different aspects of it. Got grandkids that I'm helping, clients' grandkids or first-time buyers, to where I'm got clients that are retiring. So whole perspective. So this is what I'm seeing. One, the demand for real estate is always based on supply and demand. Simple. If you have people that want to buy and there is no supply, then you're going to see price appreciation. We are seeing price appreciation in incredible amounts. And the ironic part about it is it's usually in areas that are, that slow growth, pretty predictable. I'm going to suggest, Chantel and Steve, even in the Ottawa area, I know, Steve, you and I have talked many times about how Ottawa is an area that you wouldn't compare it to the GTA in the sense of how the GTA would have, over the years has had, huge spikes, and where you and I would talk and you would say Ottawa just is really consistent. Now, my understanding is Ottawa right now in the last 90 days has just been on fire, and you're experiencing that appreciation that the GTA has experienced.
Exactly. It's finally our turn.
and and so people are going like, why would that happen? Well, two things. Money is cheap. Okay? Right now money is cheap, and so when you have people that can go out and get 5-year money at less than 2%, okay, they look at that as being an opportunity. They look at it as being, if I'm in paying rent now, if I can come up with some form of down payment, then I can actually go out and buy a place. So their buying power, they are looking at it as being, interest rates will not stay this low forever. Okay. And the fear is that even despite that, people have come out and said, and I anticipate we're going to see these interest rates for at least 2 or 3 years. And it's sort of they may go up a quarter, half a point and come back down. But the idea of it going back up to 4 or 5%, I don't see that happening. The economic factors, if that happened, would be devastating. So you have to have cheap money. And so the government has been the ones that have been spending money to be able to keep the money cheap and to be able to let the banks know that they can lend at those rates if they're insured mortgages because they're protected. So the idea of the fact that, there's going to be all these people are going to go bankrupt down the road, it's not what's going to happen. The second factor is that with COVID, yes, there have been many, many jobs that have been lost. Majority of those jobs, though, have been in industries that are service industries. Now, when you look at the service industry, for instance, it's very difficult if anybody has dealt with somebody that's been in the service industry where they are having a minimum wage per se, but then rely on tips, very hard to get them financed because majority of the time, tips are they're not done as a T4, right? So that's additional income that they have, but the banks, the financial institutions don't consider it as guaranteed income. So when you take the service industry and you say, okay, these people were in a position that they could attribute income towards, for instance, if it was a couple that were looking at buying, that could be supplementary income. Well, when that's been taken away, you actually have the government that has stepped in and said, we are going to assist you by, people that are getting $2,000 a month. Ironically enough, the banks would look at that as being income. Okay. So now what takes place is they still are in a position, if they are in either first-time buyer's position where there's a couple, that they could still have income enough to buy. Even though they may not have the actual job, there is support enough there that they would qualify. So you still have people that are in the marketplace, despite the fact that they may be temporary unemployed, which is a factor that they look at. And you also have companies that have been actually growing in this industry, in this time frame. So during this pandemic, you hear the word pivot. You've got companies that have pivoted. And because of that, they're actually expanding. And their job security is actually there. And so you have people that, one, now have cheap money. They are paying rent. Now they've been sort of said, okay, you know what, you may be working from home, but your job's secure. And so now they're in positions where they've got stable income, cheap money, and they're in a position where they don't need to rent. And one of the factors is that they can move pretty well anywhere. You now have people that relied on being, I'm just going to use the GTA, and I'm sure the same thing is happening in the Ottawa area, where they don't need to be having to travel to get to work. And if they do, it's limited. They don't have to go in 9 to 5, 5 days a week. Okay. So what you're getting is you're getting people that are saying, hey, I'm going to get rid of my rent. I'm not going to have as much travel. And when I say not going to have much travel, they have been told, and I have clients of mine, I have employers that I know that have basically said, we are not bringing people back for a minimum, and this was only a month ago, of another year. They were originally told it would be January this year is what they were hoping for. Now that with everything in place and all the new advanced technologies, they're looking at saying our production levels have not dropped, or if they have, it's been very minimal. So they've all instituted, we're not bringing everybody back. And in some cases, they've actually said we will not be coming back. Fully employed, but working from home. So if you take that factor, then what you get is you get the sprawl, as I call it. You get people now saying, okay, I can have cheap money. I've got a secure job. Now I'm going to go buy something. And I'm going to buy something that doesn't have to be a condominium, because I don't have to be near transportation. I can move anywhere. And so what they end up doing is I can at least vouch for the area of, so let's call it, South Central Ontario. And I'm sure the same thing's happening in the Ottawa area. People are going out to the outskirts where they would not go before because of the need to travel, to get back and forth to work. And so you're hearing about downtown Toronto as being a ghost town. And Julia, Julie does lots of, lives downtown, does lots of work downtown. And I was recently showing some condos downtown to clients of mine just for rental basis. And it's a ghost town. It is. And so the factor of you look at what Toronto was doing even a year ago versus what it's doing today, those people that were living downtown don't need to live downtown anymore. So they have gone and they have bought 2 and 3 hours away from Toronto. Because one of the biggest factors is they need high-speed internet. Very rarely was that a question when you were showing, yeah, you have internet, yeah, but now I need high quality, high-speed internet because I need to be working from home. And so this is one of the things where they're going, okay, 2 and 3 hours away. I talked to our office in Sudbury, okay? Sudbury said last month, 46% of their sales were from outside brokers, bringing people from outside Sudbury, moving into Sudbury because of pricing. And they just said because they don't need to be commuting to, let's say, around the GTA. So then you get those outside influences happening. You get the first-time buyers. Now you get the retirees that are saying, okay, we're going to sell our place in the city and we want to move outside the city. So what you end up doing is you end up having 2 buyers that are focusing on the same product. So you've got let's call it the first-time buyers that are millennials that are basically saying, okay, we don't need to be downtown. Let's move out of downtown. Let's move out to outside of Toronto. Then you get the retirees that are selling in Toronto that are basically saying, okay, let's capitalize on this hot market for freehold properties. When I say outside the core, condos in Toronto, we'll talk about that a little bit, but anything outside is still quite busy. And so you get 2 buyers that are now in the outskirts, let's call it, vying for the same property. And this is why I'm saying outside the core of the cities is where you're seeing just crazy appreciation. Multiple offers like crazy, in the sense, North Bay. I talked to Mike Berman up in North Bay, and he said, Scott, prior to May this year, we very rarely saw multiple offers. all the deals are multiple offers. Even their agents are starting to delay offer presentations, which they've never done before. So just give you a little bit of some feedback. I've been showing places up in Collingwood, so that's about 2 hours away from Toronto, and sold my client's place in Mississauga. Sold it to them 30 years ago. So good clients come back. Had 4 offers on their place, sold it, and now they said, okay, let's we'll start looking up in Thornbury, Collingwood. In the last probably 2-3 weeks, prices here have jumped on an average 15%. So stuff that was 500 is now pretty well close to 575, 600. And they're holding off offers. And it's everybody is from the GTA. And you're getting, again, the 2 type of buyers. You're getting the retirees that are looking to say, okay, we want to move out of the city, and you're getting first-time buyers. And so speaking with the agents up there, they're going like, this is what we're seeing, Scott. It's like the whole spectrum. It's not like, we used to have people would come up and, the retirees were looking to buy something, or they're looking for a second property that they were going to use seasonal. He said, people are moving in, and it's both aspects. So the pricing here, just, so that's Collingwood, Barrie, Niagara Falls is still quite busy. London, Ontario. We've done sales in Simcoe, Ontario, where there was multiple offers. And it's going to, my opinion is, it's going to continue. So what do you do with that information? Well, a couple things that I would say you do with that is you really got to talk to your database and your clientele and let them know what the reality is. Make sure that you do your research, because everybody, if you don't have it, I highly recommend, at least in Ontario now, you've got that ITSO real estate. I'm just going to call it ITSO because that's 22 real estate boards now that share the one MLS. Okay, so the information is available for everybody if you're part of one of those boards. Use that, because you can, you got to guide, you got to be the professional, you got to guide your client base. And those are things that are important, because what I'm seeing now, again, is people are really doing their research, and and with all the different companies that are now putting everything on their websites, right? So the client base, your own client base, is going to be very, very knowledgeable about areas outside the GTA, and so, or outside your city core, because that's where they're looking to move. So one of the things I would suggest is, if you're seeing that, then spend a lot of time on the system. Really get to understand what's going on in those areas. And the other factor is, lots of you have clientele that are investors, okay? The typical style of investment, in my opinion, has shifted. You had buyers, investors that want to buy in the downtown core. They wanted to buy in the downtown core because they could do short-term rentals, Airbnbs. They wanted to be in the downtown core because you had lots of tourism, immigration was coming in. That's not going to happen now, probably for the next 1.5 years, 2 years. Okay. In the downtown core right now in Toronto, we are seeing, and it is done, a complete turnaround, where last year, if you were trying to lease out a 1 or 2 bedroom condo, you'd have multiple bids on it. Today, that same place, give you a bit of an example, place I just rented in Liberty Village area, 1 bedroom plus den, came with a single car parking, leased it for 1 year for $2,100 plus utilities. Julia, 2 years ago, 1.5 years ago, $2,600, $2,700 in that range.
Yes.
So,
I have a few of those on the market right now. That's just I have one that's a 2+ den. It has a locker and parking, and I usually lease it for $3,200-$3,300 without locker and parking. We have replaced all the appliances and fixed the ugly blinds. I've got it for $29.95. 0 showings.
Okay. Yeah.
0.
And
And it's a perfect place to put 3 people in because they can, split it 1,000 apiece.
yeah, and so the core of when you look at let's call it metropolitan cities, you usually have universities, colleges that are in the downtown core. Okay, the majority of the tenants were students. Students aren't going to be there. Students are not there. They are not going to probably be there. If they are, it's going to be very limited even next year. So you have a flood of new places that have been finished that now there's no tenants for. You have a flood of Airbnb units that they no longer can use as Airbnb. So those have come on the marketplace in twofold. One is 1-year annual rentals, and they've come on as condominiums for sale. Okay. Now, Steve, Chantel, are you guys seeing any of that in downtown Ottawa?
Yeah, we're starting to see it. We have a condo on York, Chantal.
York, yes, on York.
Yeah.
That's right downtown Byward Market.
Yep, know it.
And we had it listed. There's 5-6 condos in the. I'll let you.
About 4 condos, the same size as this one listed at the moment, and we don't have a lot of activity on it. We just reduced the price a little bit, but I don't know. I'm not sure if it's when it's going to go, but yeah, it's a great location.
And again, it's the city centers that are going to feel this pain, in my opinion, for 2 years minimum. And the reason I say 2 years is corporations are not going to be able to bring back staff, majority of staff safely. Universities are not going to be able to bring back, students safely. And they've all started now to put in protocols where it can be done virtually. Majority of it can be done virtually online. Not the best scenario. I have a daughter who's 4th-year university at Queen's, and she is in her apartment, but nothing going on at the university. She does sit on, sits on a couple of executive committees, all Zoom meetings, and so what you're getting is they're learning, and the universities are learning on how to function doing this. So there's not going to be a big push until it's really, really safe to bring everybody back. And based on what I'm hearing, even when they do, it's going to be gradual because they anticipate until there is a full vaccine where the vaccine has been out for a year, they do not want to have dorms at full capacity. So which means that you look at any type of investment properties in downtown cores, then if you're dealing with investors, then what do you do with them? Because there's still opportunities for investors right now. And the opportunities are actually outside of the city centers. By an example, I'm in Collingwood because a couple of years ago, I sold an investor bungalow townhouses, 2-bedroom, 2-bath, single-car garage bungalow townhouses. Rented them both last year. I had 2 of them, brand new. We rented them, one for $1,900 and one for $2,000 a month. Okay. One just came up. I just listed it 2 days ago for $2,500 plus utilities. We have 3 offers on the rental. Okay. I'd also rented a place, Carol, in Oakville. And so it was a 1-bedroom plus den, walk-up style, the short style, 3-floor condominiums. I rented it 2 years ago for we had a hard time getting the 1800. Put it on at 1850. We had 4 offers and rented it for 1865. And that whole scenario is, if you look at talking with your investors, is you've got to think and show them that anticipation is, and what we see is depreciation's already started happening in Barrie, started happening in other areas. Speak to your investment clientele, because you can take them and be the professional and show them stuff that's maybe outside your back door. But the returns and the future appreciation is something that they can look at. Okay. So don't think that the investment market is gone. It's just shifted. So go through your database, talk with your investors, because there are still people out there, especially investors right now, if they can get cheap money, they know long-term. And I believe too, we come out of this, starting 2022, between 2022 and 2025, I think you're going to also see another big push in appreciation. The other thing to think about, though, is the other factor that's going to push that in the next 2 years is, once there's an international vaccine, you're going to start getting immigration. And Canada is actually going to open the doors to higher numbers than they've been doing the last few years. So that is going to push. Now, that's not going to be probably for another 1.5 years, 2 years that they start maximizing it. Okay. You're also going to start getting students that are going to be able to go back. Yeah, Julia. You're muted. Unmute yourself.
Sorry, I have to go.
All right. You have good luck on your appointment, and we will see you later. Students will start getting back to being in areas. Okay. So one of the things you got to look at is think about how you can look at your database, go through your database and see, one, are there opportunities in your database where you can think outside the box, where that doesn't have to be right in your own backyard. If you're not in a position to get the information, connect with the Realty Executives Network. Find out, you may want to talk to guys up in Sudbury, people in North Bay, and just say, I hear like activity there is strong and booming. What's going on? What kind of investments are there? And you don't even have to go that far. But one of the things I do, what I'm seeing is there's opportunities outside your normal trading areas that you can take advantage of. Okay. The other opportunity is understanding that this money that we have in the mortgage sector is going to be cheap for a while. Some of them are predicting 5 years minimum. Okay. So when you have, as I said earlier, when you have cheap money, the only thing that's going to change how a marketplace, the stability of a marketplace is interest rates escalate, so the buying power of the consumer decreases. Okay. You get a flooding of power of sales, or something that's going to influence a mass influx of listings. I don't see that. I do see that usually between November through to February, we see two things happen. We see some buyers that basically take themselves out of the marketplace and just say, we're going to wait till spring. You also get sellers that basically take themselves out of the marketplace. I've always been a big fan of buying properties in December and early mid-January. I've always had success with that, because I've always believed that if you've got a seller that is selling during the December season and early January, motivation. They're not saying I can wait, 3-4 months. They're not trying the marketplace. So one of the things, if you've got some buyers that are, getting really stressed with, how busy it is, if you're in in the areas where there's competition, you may just want to say to them, look, you know what? Yeah, right now, if you don't want to play in the, you know, multiple offer scenario, then if you want to take a step back for 30 days, I would just let them know that I have found that December, mid-January are months that can be opportunities. And I anticipate that, though I don't see prices pulling back, but I do see that you might not be in as much competition with as many buyers. Okay. And then I do see that moving forward, that when we get into the spring, and I'm going to suggest you're going to see two things happen. You're going to see where the people that were hoping to move this or retire, let's say, or sell the property and then move to their places in Florida or down to the States to retire, that is where you're going to start seeing some of those properties come up early spring. There's been delays. I know even some of my friends have said, you know, they normally are heading down to Florida. They're not going down until January, February. So one of the things I would suggest is that the next 3 to 4 months, we're going to see not a pullback in pricing. There might be a slight adjustment just because people aren't getting multiple offers as much as they were, but I only see that over the next 60 days. Coming back into March, even if there is a third wave, because you know we are in our second wave, even if there is a third wave of COVID, my anticipation is you're going to still see multiple offers because money is going to be cheap still. Okay. You're going to have the work from home programs are not changing. They're not going to all of a sudden everybody get called back to come back work in the downtown cores. That's not going to change. So you have a situation where you have people that are in a position where they need to be able to hang on a second. Hey, hun. They're in a position where they're going to be working from home. Government programs are not going away. They're going to just get shifted. Okay. It's not like all of a sudden, like they've already said, okay, well, the government program that was for 4 months got extended to 6 months, and then they're changing it to employment insurance. Well, one of the things that I've been speaking to a couple of people that I know, they're anticipating that if it has to be another 6 months over and above whatever they've already extended, they're prepared to do it and know they're going to have to do it. Okay. So you have those kinds of things that are going to be factors that are going to keep it as a balanced marketplace. Any thoughts? Anybody got any thoughts you want to put out there, just based on sort of what I've sort of been discussing and telling you about?
Yeah, Scott, back to your immigration thing, I did hear something about their numbers that they want to increase over the next 3 to 5 years. Do you know if they're looking at that? I think I heard 300,000 or something like that.
Double what they were doing originally.
Right. Now, is that people who are coming in with money, or is that to bail out the refugees?
My understanding is it's still going to be based on certain qualifications, right? And they will have aspects of both, but they were bringing in about 150,000 was a target. And now they are looking, exactly, John, they're looking at doubling that. Now, spreading out across the country. But Canada and our economy is based on, there's been times that the immigration has carried us through certain marketplaces. And we are, I anticipate, as do some of my colleagues, that's going to be a big push in there. And again, at the same time that starts happening is when we've got the vaccine. And then the vaccine then all of a sudden becomes a factor where now you've got twofold. You've got the immigration, you've got people being able to get back to full-time work. So that's where you're going to start seeing that momentum kick in again. Okay.
But they're not looking at any programs like there were a couple years ago when they purposely brought in X amount of Syrian refugees. I don't think it was Syrian. I think that's the wrong group.
Not heard that. My understanding is they're still looking at their, there may be certain special cases, special things, absolutely, but they are still looking at how, their criteria that they were looking at before. Okay. Any other thoughts, questions, comments?
I don't want to take up everybody's time if no one else is experiencing this, but I have a young couple in Toronto that moved there specifically to avoid commute. They're in a condo. Now they're working from home. They want to do exactly what you said, buy in the outskirts, buy something that's not a condo. They're going to take the hit when they list the condo because it might be worth what they paid for it. They're going to take a hit because they're going to be in competition when they go to buy their place in the outskirts. And then in 3 years' time, when people start coming back to the city, had they just waited, that condo would have gone up in value. So how would you, when you say use your expertise, guide your people, what would you tell them to do?
Okay, now this is an open floor. I'll have my opinion, but we got some great talent here. So how would you answer that, somebody? Don't be shy.
Well, I always say to anybody who buys, if you don't hang on for 5 years, you're losing a nest. Like, I think I personally think if they were my children and they made that commitment, that I would tell them to stay put. It doesn't make any commissions, but it might make you friends.
So John,
I hear you.
So you're saying they're best to stay in downtown Toronto?
Yeah.
Okay. Any other thoughts, Steve?
They could look at renting the unit, and probably with a low interest rate, they may qualify for the second property. Build their portfolio.
Yeah. Okay.
That would be smart.
But there's so many rentals up. My daughter is in that building that's right across the Mayor Canada Center. There on I don't know whatever road they call that, Blue Jays Way or at that corner. Anyways, you look out her window, she sees the big TV sign. So that one there above Real Sports. Anyways, she had quite a story. The person bought their house in February, or sorry, her condo in February. So she was given notice. They didn't do it appropriately because they tried to say they were moving in when really they weren't. They wanted to turn it into Airbnb. Anyway, so my oldest son, who is a paralegal, said to them, well, it doesn't work that way. They have to prove to you they're moving in. So they challenged them. And of course, they weren't moving in. And so it got extended because of COVID. And it just closed here 2 months ago. The funny thing is that the realtor who listed the place did not do their job right off the bat because they guaranteed the buyer empty possession, vacant possession, which they couldn't do unless they're physically moving in, which they weren't because they actually just bought a house in Milton, the same family. Anyway, so, and we had proof of that. So to make a long story short, they had to pay my daughter almost $30,000 to leave the condo. Then the very next day, the Airbnb thing came in. 37 properties in her building were up for rent. Then the money didn't come through. The deal fell through. My daughter got her $30,000. Now it's back on the market again because the buyer couldn't make it work or whatever. The bank said no because they have no rental or something, or ugly. Anyways, to answer your question about renting it, it might be very tough right now to rent it. You may not get what it takes to cover your mortgage.
That's correct.
Yeah. Okay. So again, Carol, explain to me why these people want to move out to the outskirts. Let's call it move out of the city.
Just because they can. The only reason they went there was to avoid the two of them traveling back and forth. So $700 a month on the GO train, and getting stuck in the city. So they wanted to be closer to work. They wanted to experience Toronto nightlife. Toronto nightlife's closed. Both of them are working from home. They want to get into either a townhouse or a detached house.
Okay.
They're seeing prices go up. They feel like they're missing the boat if they don't make a move, but they're going to basically get what they paid for the condo, and or they're going to have to put their own money in every month to cover the differential between what they're going to be able to get for rent. So I've said to them, if it were me, and I know no commissions earned, but I've said to them, I'd just stay put.
Okay. So here's my 2 cents. Okay. First of all, people buy property to live in and experience a lifestyle. If your clients are feeling, one, that they've experienced the downtown condo and they've experienced Toronto, they may be actually looking at saying, we are now in a position, even if we have to take the hit, is we want to get a backyard. We want to change our lifestyle. Okay. So first and foremost, I would say sometimes we have to listen to what our clients are telling us, right? So your client basically is saying, we think we might miss the opportunity. But I think if they really listen to them, I think they were basically saying to you, we don't want to live in the condo anymore. We don't want to live in downtown Toronto anymore. We would like to get out if we can. Okay. And experience the backyard, experience we're both working from home. If they're working from home in that condo, maybe there's an issue there too. Okay.
But they only closed in July and Toronto shut down in March. So they have not been able to do those things in the city. But I hear what you're saying.
Right.
Then, so can I skip to a different situation? You have couples who are owning townhomes in Oakville that are worth $1 million or somewhere between 900 and $1 million.
Okay.
Then they want to get into a house, but everything they're looking at is 1.3. There's nothing in between. Or it's a fixer-upper that they have to put $200,000 in.
Yeah.
There's like a huge hole there for them to be moving up. Even though money's cheap, that's a big jump for them.
Okay. So, well, there's always going to be a difference between moving from a townhouse, moving into a detached. Always will be. And the factor is that if you're buying and selling in the same marketplace, then you just have to understand you're buying and selling in the same marketplace. So currently, that is the difference. If they wait until that gap's a little lower, then what you have to consider is what are the factors that made that lower? Well, usually it's interest rates are higher. So interest rates are higher, the difference that they're going to try and match up to, they may not be able to because the interest rates have changed. And so in that particular scenario, I suggest that if the numbers work and they qualify to do it, they're going to have to look at that, because that situation in Oakville, I don't see that changing. I don't see there being a flood of properties that are going to come on in that price range, especially in Oakville, that's going to make that gap change.
And I know you don't have a crystal ball, but in terms of that appreciation that you're talking about, do you think that townhouse that today is worth 900,000 is going to appreciate more than that detached house that's 1.3 or 1.4?
They are going to appreciate similarly, but depending on the detached they buy, there's one factor that you have to look long-term on. Okay, and the easiest example would be, I know in all our trading areas, okay, there's that little bungalow, that tiny small bungalow, little 2-bedroom bungalow that everybody thought, okay, it's a tiny little house, but the land that's it's sitting on, that's where the value is. So there are places just in downtown Mississauga and Port Credit that are 2-bedroom bungalows. Oh, better example. I was just talking to Eric and he was going to be on this call, but he had to go list the property. in Etobicoke, in East, that's West Toronto, on the border of Mississauga, he had what he called and I grew up in Etobicoke too, so it's basically a 1.5 story or two bedroom bungalow listed at $879,900. He said, Scott, literally it was a tear down. Yeah, 23 offers.
Wow.
Sold for $1,020,000. Okay.
Wow.
Where I'm going with that, Carol, is the house itself is worth nothing, but because it's a freehold and the land that it sits on has a higher and better use, that value is not based on the house. You will not get that kind of appreciation in a townhouse condominium or a freehold townhouse. Okay, so don't know if that makes any sense, but you know, land. They don't make any more of it. So long term, the land that a house sits on is sometimes more valuable than the actual building that's there. So long term for your clients, if they moved into a house, especially in Oakville, Carol, how many times have you seen the old house come down and what was there was maybe a 15, 16, 1,700 square foot house, and all of a sudden there was a 4,000 square foot house. That 4,000 square foot house was all of a sudden worth $3 million more. It was because they were able to do something with the land it sat on. Does that help you at all?
Yes, thank you very much, everyone.
Okay. Any other thoughts about where the market is? Any comments on sort of my take on what I see? Now, again, this is just, I'm looking at stuff, I analyze stuff, and I've seen sort of marketplaces shift over, many times over my 40 years. And those are the factors that I look at. Those are the things I see. Any questions? Anybody got any further comments before I'm going to cover off one more thing before we finish off? Okay. Professional real estate corporations. I've been putting out some information just to let everybody know. And I did send out an email last week just to let everybody know that we do now have the paperwork. The scenario is if you are considering incorporating, keep in mind that it is on an individual basis. Please seek guidance from your financial advisor, your accountant, on if your individual situation makes sense or not to do it, because it certainly is an individual thing. The format understanding is, yes, your money that you would make from sales would be paid to your corporation. We could pay it to your corporation. There are steps that you have to do. Then beyond that, it would be your responsibility to then figure out how you get the money out of your corporation to pay yourselves. Okay? So you actually would then have to look at, if you don't have the ability to know how to do that and track it and pay corporation tax, pay corporation HST, then you have to factor in that extra cost annually for you to pay somebody else to do that. Okay? That's why I just wanted to let everybody know we are in a position, we have the documentation, we have the company contracts, the addendums to contracts that could be done. And so reach out to me as an individual, but first seek advice from your professional financial person, and they would give you some guidance on if it makes sense or not. Because there's been lots of, everybody was on the bandwagon, yeah, but look into it a lot further. Just see, because it is not for everybody. Okay. Any comments on any of that, John?
Yeah, I would have to agree. I've been incorporated since '97 in real estate because I came from Alberta, which that was allowed.
Yeah.
And I did it because I did too many deals. But I would say that if you need, the key to me was always 70%. If you need 70% of every penny you make to live, it's very close on whether it's worth doing it or not, because that 30% that you're hoarding inside the corporation sometimes doesn't pay the bills. but if you can live off of 30 or 40%, the opposite, if you can, I think at the time I was doing 70, 80 deals a year, and I was living off of maybe 20% of what my bank account was sitting in, then it's perfect.
Yeah.
Because it pays all the bills. You just take in what you need to pay your mortgage and your
Yeah, that's a good analogy. Yeah, because basically what you're doing is money goes into the company, and then you want to take out just the very little amount that you need to personally operate. Yeah, then it works.
Back then, though, it was different because we could even pay our kids dividends, and
Yeah,
there was lots of things I was doing.
yeah.
They've all changed.
This is all changed. It's one person, and you have to be the 100% owner of the voting shares. Okay, so that's why I say check with your financial person, or reach out to me individually if you want to, bounce off where you think you are, and I can give you some guidance on if it is or it isn't. Okay. The marketplace is, marketplace is still there, and keep in mind, it doesn't matter what the marketplace is going to do. It's how many people are you contacting and how many people are you communicating with about buying and selling real estate that's going to make or break your business. Has never changed. I've sold real estate in 20, 21% interest rates, done it in different marketplaces. And it all gets down to the simple fact is how many people are you communicating with and really communicating with about buying and selling real estate. Then you will not have any issues about what the market's doing. Okay. Hey, I just want to say thanks again. I know it's been a few weeks since we've done this, but as I said, I just thought I'd bring you up to date. And we'll look at doing more of these as I see things change. And again, I'm always available. If you want to reach out to me, let me know. Fire off an email, a text, give me a call. And great to see everybody and chat. Thanks for everybody's input.
Thanks.
Thank you.
Take care.
Bye.
Bye.